In last week's news video, I talked about how Adobe had acquired an Indian generative AI startup that's headquartered in the United States called Rephrase.ai. And in this week's news video, I'm going to be leading with a very similar story. Google is reportedly planning on investing $4 million into another Indian generative AI startup that's headquartered in the United Kingdom called CoRover.ai. What's so special about CoRover.ai? Well, the company is building something that they're calling BharatGPT, which is basically their answer to OpenAI's ChatGPT. BharatGPT is trained on an indigenous large language model, which helps it to support more than 12 Indian languages, as well as 120 plus foreign languages. And so that's already much larger than ChatGPT's support for just 95 languages, but unlike ChatGPT, which can only take instructions in English, BharatGPT can take instructions in any language that it supports, and that really sets it apart. See, today, English is a secondary or even tertiary language for most people here in India. For a lot of people, it's not their primary language, and so for a company like Google, which made almost 25,000 crore rupees in revenue from India in FY22 and probably has most of its users here in India, it makes sense that they would want to increase their presence and reach for those users who don't speak English in the country. And later on down the road, if Google decides to acquire CoRover.ai's BharatGPT, then this could also help Google's own generative AI platform Bard to incorporate regional languages and make the entire product and service much better designed for local languages in India. That being said though, CoRover.ai is based in the United Kingdom, like I mentioned earlier, and so now let's talk about an Indian AI company that's actually based here in India, Bhavish Agarwal's AI startup Krutrim Si Designs, which recently raised $24 million. So this company has been shrouded in mystery for quite some time now, but we're starting to understand a little bit about what they're working on. So it seems like they're building a chatbot for Indian users as well, and Bhavish is actually taking inputs from his followers on X. He's asking people which features and capabilities they'd like to see in the app, and he's going to be giving away an Ola S1X Plus to the person who came up with the best idea. Alright, next up in the news, Indian social media is dying, and more specifically Mohala Tech, which runs Sharechat and Moj, two of India's largest social media platforms with over 325 million monthly active users. It's on the verge of death. Sharechat was last valued at $5 billion and has raised a total of $1.7 billion, but that might not be enough for them to survive. See, despite raising all that capital and building a massive user base, Sharechat has failed to monetize. They're simply not bringing in enough revenue to cover their expenses. So let's actually take a look at their recent financials for FY23, and we can see here that they made 553 crore rupees in revenue, but their expenses went up to 3,959 crore rupees, leading to 3,241 crore rupees in losses. In other words, they've been spending 7 rupees to make 1 rupee in revenue. Their cash burn is extremely high, and they haven't raised any money since 2022, and that doesn't paint a good picture. In fact, now the company is reportedly looking to raise $50 million in a bridge round, but their valuation is expected to drop as low as $2.2 billion from their peak of, like I said earlier, $5 billion last year. In fact, according to estimates from the cap table, and do take that with a grain of salt, they're just estimates, but Sharechat might have as little as 6 months of runway left. They're probably just desperate to raise funds at any valuation because at this point, it's all about survival for them, especially since none of their monetization plans have worked out the way that they intended. They tried to venture into the live e-commerce space with the acquisition of Ilan back in 2020, but this only managed to generate about 5 crore rupees before it was shut down in January of this year. And then you also have their venture into the fantasy gaming space with G11 back in 2020, but this too was shut down last year in December after making just 27 crore rupees in revenue. Alright, next up in the news, but continuing to talk about declining valuations here, Byju's investor process has again marked down their stake in the company, pegging the valuation of Byju's at less than $3 billion. This is down from the $5.1 billion valuation that they gave to Byju's back in June of 2023, and of course it's way down from Byju's peak valuation of $22 billion. That's more than 85% of this company's value being wiped out in less than 2 years, and the spiral doesn't seem to be getting any better here because now Byju's is in trouble with BCCI, the Board of Control for Cricket in India. Apparently, they owe the BCCI 160 crore rupees from their sponsorship deal. See, back in 2019, Byju's had signed a sponsorship deal with the BCCI to sponsor India's cricket team jersey, and that deal was supposed to end in 2022, but the BCCI had persuaded Byju's to extend that deal until November of 2023 until they could find a new sponsor. However, by then, things had turned bad for Byju's, as we all know, and so they wanted to exit the deal early, but the BCCI had asked them to stay on until March of 2023 so that the new sponsor could come on for the new financial year. However, it looks like Byju's has failed to pay their dues, which amount to 160 crore rupees during this period, and so the BCCI has taken them to the National Company Law Tribunal, the NCLT. Alright, next up in the news, this one is pretty big. Recently, Delhi's Lieutenant Governor approved the Delhi Motor Vehicle Aggregator and Delivery Service Provider Scheme 2023, that is a mouthful, to transition all commercial delivery vehicles used by e-commerce, logistics, and aggregator companies to electric vehicles by the year 2030. However, the most important piece of information here, and this is massive, is that from immediate effect, only electric bike taxis will be operating in the city. And yes, this will be very good news for the city and its pollution levels, but according to Delhi's bike taxi union, this decision will also leave more than 50,000 bike taxi drivers jobless. However, there is one company that was probably rejoicing after hearing this news, Ola. In a letter written to the Delhi government, the bike taxi union said that there aren't enough electric bikes available in the market to meet this newfound demand, and also a lot of the drivers who are acting as bike taxi operators, they just can't afford to buy these EVs at the moment, especially because a lot of them have just lost their jobs, and also they probably spent a lot of money to buy those IC engine vehicles in the first place, and so now they're in a tough financial spot, but this might have opened up an opportunity here for Ola. See, they've already launched their electric bike taxi operations in Bengaluru, and this might be the perfect opportunity for them to enter Delhi as well. As for the lack of electric bike taxis available in the market and their affordability, Ola might be very well positioned to solve these problems too. They have electric scooters. They are actually the largest manufacturer of electric scooters in the country, and also they can help these drivers with financing so that they can get their hands on these bikes at affordable prices. And so this would make Ola the only electric bike taxi operator in the city, and it would also address the problem of scale, so it's a win-win for Ola. Alright, next up in the news, back in 2018, Warren Buffett's Berkshire Hathaway had invested 2,179 crore rupees for 2.46% of Paytm. They had bought these shares in Paytm at an average price of 1,279.7 crore rupees, and the company had sold shares worth 301.7 crore rupees during Paytm's IPO at a price of 2,150 rupees per share, booking a pretty decent profit. However, last Friday, Berkshire Hathaway decided to sell its remaining stake in Paytm, which was worth 1,371 crore rupees. And long story short, Berkshire Hathaway made a loss of 507 crore rupees on this investment in Paytm, which was their first direct investment into an Indian startup ever. And so it's really unfortunate to see that this was the outcome of that investment. Alright, next up, let's move on to the funding news segment, and it's the end of the month, so we decided to collect all of the funding data throughout the month and bring you some of the key insights that we've collected. And first of all, here's some big numbers. Throughout the month of November, Indian startups collectively raised $400.16 million across 53 deals. The biggest funding round was raised by Pune-based logistics company ExpressBees. They raised $80 million in their Series G, followed by fintech startup Incred, which raised $60.15 million in their Series D to become India's second unicorn of 2023. And then we also have quick commerce startup Zepto, which of course raised $31.25 million in their extended Series E round. And it's interesting to note that all of these funding rounds actually happened during the same week. Now let's take a look at the sectors that raised the most funds, and it shouldn't come as a surprise to anybody that fintech startups topped the list at $148.4 million raised across 11 deals. Then we have e-commerce startups. They raised $85.98 million across 21 deals. And then we have EV startups raising $43.3 million across just 4 deals. Now looking at regional funding, surprisingly, Mumbai has outpaced both Bengaluru and NCR to secure $76.14 million across 11 deals, followed by Bengaluru with $68.18 million across 14 deals, and then NCR with $61.27 million across 17 deals. Alright, now let's move on to our regular weekly funding news, and let's take a look at Kunal Shah's latest startup investment. So this time it's a startup called Elivas, which is a property management platform for luxury villas and apartments. You can book any property that you like through this platform, and the company also helps villa and apartment owners manage and monetize their properties on the other side too. So why did Kunal Shah decide to invest in this startup? Well, the answer might lie in what Elivas' co-founder Ritwik Kare told Economic Times, because according to him, while the hotel market has been growing at around 3 to 6% annually, the demand for homestays and villas has been growing by more than 25% every single year. So Indian tourists really want luxury experiences. Now, looking at the ecosystem as a whole this week, Indian startups raised a total of $58.67 million, which is slightly lower than last week's $61.05 million. So starting off here, we have Pune-based electric cycle startup eMotorad. They raised $20 million in their Series B round. Then we have another Pune-based startup Fi Commerce. They offer omni-channel payment solutions, and they raised $10 million in their Series A round. Then we have cannabis-based medicine startup Hemp Street. They raised $1 million in their pre-Series A round. And then finally, we have alternate investment platform Sustfest, and they let you invest in renewable energy projects for a return, and they raised $250,000 in their seed round. All right, that is all the startup news that I have for you guys this week. I really hope that you enjoyed the video, and I will catch you in the next one.